All right, good morning, everybody. So today we're going to get durable goods. We're looking to see this change direction. We can see that estimates are positive after the previous has been negative. We'll see which way that goes, but really it's a small economic data print. We can see the impact levels. They suggest they're high, but uh, really when you think about all the economic events out there, this doesn't rank that high. Still, it is data. It's coming at us. We got earnings before the open today on the war machines. So, these guys, they tie into the drone space. It's not just, you know, the war machine anymore. Raytheon, Lockheed Martin. Then we've got some cruise lines in there as well, which I was looking at those yesterday, and they've got this projected um, this cruise ship that's supposed to be coming out in 2025, and then another couple of ships in 26. These are supposed to be longer term, almost live on board kind of ships. Of course, they've been uh, touting these ships for a few years and still pushing back and delaying the launch. So that could affect their earnings. But otherwise, the cruise ships have really cleaned house. So Europe's positive. Hong Kong's basically flat. We're starting into the Chinese New Year. Today it will go until February 4. They'll be back on February 5. I still believe that we're going to start to ramp up from there. And it's not this deep sink either. I'd been saying that even before the release of Deep Sink, that I thought that we would go on their holiday. They'd go into kind of a quiet period. We'd come out of that and begin the ramp up. So Baba, Baidu, KWeb, JD, PDD, that group. Then the US markets are basically flat, waiting on data. Christine Lagarde is going to be speaking today, but I don't think this is a big one, even though it shows big, but it just depends on where she's speaking, right? And I don't think this is supposed to be a big one. Either way, when you see that you've got Fed speakers, whether they are US or somewhere else in the world, you want to dig down into it. They can be, at some Girl Scouts lunch for all we know. It can be a pre-recorded speech where there's no questions, or, it can be something really big. So don't just assume when you have a speaker listed that it's going to be impactful or that it's nothing to worry about. You always want to check. Yeah, we can see some of those AM releases already. Tomorrow, we're going to be kicking off FOMC, and then after the close, earnings on Tesla, Meta, and Microsoft. That's going to be fun. Thursday, we will get some jobless claims. Any job numbers are relevant, want to pay particular attention to them. We'll get data from the ECB. We have the GDP report. That's a really big deal. And we're going to get earnings on Apple after the close. And then Friday, PCE data. So Yellen was replaced by Scott Bessent. That was confirmed last night. He'd already, been working and integrating his way in, but needed to be confirmed. So that's done now. No hiccup there. And then next week we will begin getting into the QRA. So we had this base case argument that we were going to go sideways into FOMC, what I call the hurry up and wait market conditions. That was the baseline last week going into the holidays or into the weekend. And then, of course, the news came out, knocked the market down. And at that point, we had to take off the hurry up and wait because we expected some sort of mean reversion, dead cat bounce, like a least squared method sort of reversion back towards the mean. And the question was, well, how far are we going to bounce before we stall and then go sideways and wait on data? My concern is that we would get stuck inside of that really big Monday candle and that we would go IX10 waiting on FOMC. If we were really lucky, we would have run back up and this would have been a really long doji. We could close near the high and then today just, kind of pop back out of it and be somewhere inside of Friday's range. We didn't get it. So now we are trapped inside of yesterday's range, and it's a really big bar. IX10 is a great play when it's a very narrow range play. All right, say the range that we have this morning in this little blue spinning bar here. If we had 3 days that big and it was IX10, that would be a fantastic setup. But instead, we're trapped inside this really big bar. Well, that really big bar, you call it a lot of things, the control bar, the mother bar, whatever you want to call it, that is now the boss. That's the candle of control. So we have to get out of that to do anything else, which, when you say it that way, it makes perfect sense. We can't break down if we're inside this. We can't break out if we're inside this. We can't do anything if we're inside this. So that's obvious, and that's pretty simple. But we can define it a little bit. We can break it in half. So lay out the 50% mark. 60-26. It doesn't necessarily line up with something, say, like a cog line or a big options level, anything like that. So it is an extra line that we wouldn't have otherwise. And then, of course, we can mark the close and the low and the high. And we do have a gap that needs to be resolved. Now, when it comes to gaps, different analysts do it different ways. It doesn't mean that one is right and others are wrong. It's just the way that I do things. We closed here, 60-31 cog line, and this gap will not be resolved until we get back to where we closed, because that's the way I work, right? If we left that spot and gapped down, then the gap is not closed until we go back to that spot. Now, other analysts will do it different, and I've seen both ways work, but I'm not a fan of wishy-washy approaches, right? So I like to just pick one, and then that's the way that I roll. You do you. If you like it one way, do it that way. If you like it the other, then do it the other way. Don't facilitate back and forth from doing it one way this time because it suits your needs, and then do it a different way next time because, well, it just suits your needs. The way other analysts will do it is, if this is the candle that we gapped down from, if we get anywhere inside that range, then the gap is closed. Not really the way I like to do it, but there you go. So you just need to pick one. So now that we've defined control, we have to get out of it. That's one piece. The other piece is the construction that we had been working on to resolve this downward move that we had been dealing with, right? We had this very beautiful move to the downside. And when we began this run back up, we needed to get past this high, and then we needed to get past this high. We thought we were going to see another lower high, but we didn't fall back, so we continued to rise. Then we topped out here, and we're now getting our first higher low. Now, it's one bar, but we would still count it as a higher low, just like this really big bar was counted as a lower low. It only took one bar, right? That's the way it works. This little bar, we didn't count it as a higher low because it didn't travel far enough. So we do have a higher low now established. And I had talked about getting this, right? When I've laid this out multiple times, walked through it, discussed it. And in that discussion, I had mentioned we needed a pullback to set a higher low because it's the healthy thing to do to establish this turn and to come back out of all of this. So this was on the table, although the speed, the velocity, the rate of change in the pullback was really swift. We should have traveled that far over, the span of a week, and we did it in a single day. Because of that violence, it's likely going to take a little bit of time to come back out of it. There is a difference between this bar way back here and this bar here. One, how they closed. So if I clean up all this mess, we closed in the lower portion of this negative bar. And when we challenged the half 2 days later, it was rejected. Then we challenged it again, and then we finally made it above it. Now, we weren't able to keep it. We ended up rolling back down through it, but it all started with where we closed. Take that to the bar we're working on now. After we set that low, we rallied up and we closed above the 50%. That's a really good start. We eliminated 3 days of trouble there, 3 days of work. We want to keep above that level. Now we can wick down below it. We can go below it through the day, but we want to get back above it and close above it on the day. If we close, say, on the line or just slightly below, the market will take it. It's good enough. We just don't want a solid, definitive close below this level where it seems like we're really going to continue going lower. That'll start to break this entire thing down. We've already set our higher low. We don't need to put in any work or go down here and reconfirm it or validate it or build more structure against it. It's set. It's there. It's also a very key options level, 59.50. So it has everything it needs. We got to keep above this 26. So when we bring it into the intraday, you can see we're still flirting with the volatility trigger and the 0 gamma level. We barely got above that, came back inside it. We can hover around these levels for a long time. They can act like a magnet, especially when we think about the market going sideways, waiting on data. It doesn't have to. In lower volume environments, price can exceed your expectations for how far it can travel. But the base case argument was that we would hold the line while we go into this really big data, because why would any firm or institution want to guess or assume that they know what's going to happen in front of all of these events? Especially now with what happened over the weekend. So sure, we could bounce back up and we can get back to where we came from, at 61.32 cog line and then have FOMC. But it's much more likely that we just stay inside the range that we built yesterday and wait on FOMC and the big earnings that are on the table. So compared to the 341 cumulative overnight volume of yesterday, this 105 in the cumulative overnight volume, it looks really light, but it's heavy volume for overnight trading. Generally, we would see something in the 50s or the 60s, and on an FOMC week, seeing 40s and 30s aren't out of line at all. So we're not in a low volume environment. And while we're still waiting on Spot Gamma's founder's note for the AM edition. The PM did talk about a lot of option structure around us and how we're likely to get stalled here while we wait on all of this to pan out. I just checked. They have the AM out now, so I'll share it after the meeting. So this is today's levels, the average daily range. We were closer to the upper edge, giving us a little glimpse that we may run up and hit that first before we do anything else, but we already sold off of that, and now we're basically flat again. So there's no edge in trying to guess which direction we're going to go or which side we're going to hit first. If it's going to be a hurry up and wait day, we don't have to hit either one of those edges. There's been a lot of work done just to recover from the bounce or from the fall, to get this bounce and to run up against that half point and through it. It's absolutely possible that these two red lines today define our range. All right, we were talking about this volume profile yesterday. This is the profile for the whole week. And you can see how it's centered around that 6011 cog line. It's a little higher than that, 6021. But it's a really wide zone. Generally, we would draw a zone like this a few points around that red line. But the whole thing is a high volume node and a very large price shelf. Getting away from this is going to take time. It's very likely that we reciprocate on each side. What we get on one side, we get on the other side. Even if we don't do that, it's likely to act a bit like a magnet, and we just chop back and forth on each side of it. We need to get away from it. In the meantime, if we hover around it, we can go up and down through it like it isn't there at all. Don't expect it to act as a support and resistance as long as we're within its range. Now, if we leave the range and then we come back to it, then we would expect it to be support or resistance, depending on if we left above or below it. We zoom out and look at what we have around us. There's nothing in the way to the upside, back up to where we came from at that 6130. $58.50 or 58.11 is still the downside structure where I would expect things to pause if we were to drop and get nasty down that direction. We're still underneath the floor pivot. It's really close to 6,100. We're not even inside the week's floor pivot channel. Today's floor pivot opened lower than yesterday. That's bearish, but price opened above it. That's bullish. Those two kind of cancel each other out. It's a wider channel than yesterday, implying that we won't break out even if we try. That the breakout would fail and we would just come back in again. Just keep in mind that these channels don't make price breakout. They just give us some insight on what to expect if we do try to break out. We've already hit the pivot, so it's not an MDP. But we do have an MDP from yesterday. It's a missed daily pivot. And having one yesterday counts for today. That's the way it works, right? If we had one today, we would count it for tomorrow. We had a fairly tight IB in the overnight, and we didn't really get a lot of work done. So, when we think about unfinished business, there's still a capacity to get work done today. A lot of unfinished business at this point. Nice move through the kill zone too. I mean, it wasn't a significant move, but compared to that really tight range that we had all night, it was better than nothing. And it's nice to see that we still have that kind of consistency, right? The trains are running on time. Markets are still behaving the way that they're supposed to, which is important because, technical analysis is based on markets behaving in a normal way. When they start behaving irrationally and acting out of turn and making big violent moves, technical analysis, the effectiveness of it goes down the drain. Yesterday, I seen some pretty big hedges coming in for Friday. We were looking for like market maker move in yesterday's trading in the front end. And sure, there was a little bit, it didn't really stick. So I started looking a little further out, and there was some pretty obvious structure being built on the Friday expiration. It's not generally what we see them do when it comes to hedging, right? When it's additional hedging, because they're always hedged, always. It's when they start piling on additional hedging, they generally just do it right up front. They don't go out a few days. If they need it for Friday, they put it on Friday. So I don't know what to do with it yet. I spied it yesterday. Continue to look for it today, see if they're just building out a position or, what they doing. I don't know. We still have a disagreement between the TPO and the volume profile. And we didn't add a significant amount of volume down here. It's at 6,000 level. This is the level that we're expecting to see dissipate over the next week as this volume disappears. So we were expecting to lose this, which would really wipe out that volume. So when we came down and we hit that level, we started contributing to that volume level again. The concern was that we would build it back out, and then it would take weeks to get back to that volume and start taking it out again. Well, we didn't really deposit that much volume there, so we don't have that concern. We still need time to go by to take out, all of these candles. So at least a week's worth needs to get out of here. And when we do that, it's likely that we're going to see TPO move up and match the volume profile. There's really nothing else of structure at this point on where we could go other than perhaps where we're at now. But that's assuming that we're going to IX10 and stay within Monday's range for a few days around this 60-50 level. And if that's the case, then it's likely that we're going to see the volume profiles point of control come down and match TPO here. We built a new VPOC yesterday. That's close enough. 628. So, a drop to the downside will run into this high volume node. Just keep in mind, it's not a single line in the sand. When you get to working with pivot points and you draw a line, imagine that you're not drawing with a very sharp pencil, but instead of big, fat, dull crayon, that it's more of a zone than it is a single tick on the screen. And we can see that through the high volume node at green area here. So the regular trading hours low really defines even that value area low here. I guess it would be better to use that than the RTH low. This value area low, 6011 cog line. If we lose that, then we can test the RTH low. And if we lose that, then we can test the close of this deep wick and then the low of yesterday. So some pretty easy levels. We're not expected to do that. So unless we get some negative news, I think that would be the only way we'd get down there to do that. But the same thing on the other side too. I don't see us getting out of yesterday's candle unless we get some really good news before FOMC. We're back inside the box, and we're supposed to close inside this box 70% of the time if it was any other product, 80% of the time because it's the S&P. We're back inside it. That's a good start. We got to close there at the end of the week, and we've got a lot of things left for the week. We're less than 1% above the 10-week moving average. That's a good start. We don't want to be this close to the 10-week. Consistently, we tend to stay farther away than this. And that's what we want. So we want to get back above at least 2%. It's a good start that we're above it, but we want to get away from it. It'll act a bit like gravity or a magnet. It'll hold us there. We need to get away from it. So on the one hand, it's good. It helped us yesterday stabilize to build some structure here. But the longer we stay here, the harder it's going to be to get away from it. So while we are in this hurry up and wait mode, the clock is ticking. We got a correction in time and a correction in price. The longer we stay here, the more that correction in time is corrected. We have to zoom in to see it, but we're at the 10-day. So we need to get completely above that 10-day and get away from it. The 10-day, much like the 10-week, it'll act like a magnet. This one isn't so concerning on a day-to-day compared to that 10-week. A good average is between 0.75% and 1.25%. Staying underneath 1.5%. Definitely staying away from 2%. We get 2% above the 10-day, we tend to pause or mean revert. So if you think about it, we're like in the center of the basketball court, and we could make a 1 or 1.5% move in either direction, and we still wouldn't be overbought or oversold. Looking at things that are down this morning. Nat gas. That's a small list. Looking at things that are up, we've got Bitcoin. We got MAG 7 up volume, which is a little weird. It just tracking the positive or negative volume within the MAG 7 group. Semiconductors are up. And the generic ETF for tech is also up. Now we can see we've got some things working in the right direction, like the China KWEB. It's positive, it's just not up enough to meet our benchmark. The dollar is up. So you definitely have some opportunities today. You know, while the indexes are going sideways waiting on FOMC, it's very likely that we see other things like chips and Bitcoin make some decent moves, especially since chips took such a beat down. They've got a lot more room to bounce back. So, you know, it's like a stock picker's day, you know, that maybe focusing on the indexes won't give you what you're looking for if we're going to be static and just going sideways. But with Bitcoin up, Riot, Mara, Hut, Hood, I mean, there's a lot of plays when it comes to Bitcoin. And there's chip companies that are lumped in with Bitcoin. NVIDIA's in there. Taiwan Semiconductors. PayPal is in there too, but it's probably farther down here as PayPal. AMD. So uranium, chips, crude, pot stocks, software, technology, China. We've got a pretty broad space today. I still wouldn't expect too much out of the indexes. Airlines are down. They didn't like that earnings. Solar also down, and nat gas. Bonds are down, but not enough yet to meet our qualifications. Been a wild run for airlines. So if they do finally start to give up, they've got a lot of room to fall. Just keep in mind, they haven't broke trend yet, right? They're still in structure. And we're looking at the ETF. You can go in and individually start picking out the different airlines. And I don't think most of them have given it up yet. So they're down, but you know, until it breaks some key levels, you don't have a confirmed short. Anybody who's listened to me for a while on that one, right, you'll understand the difference between waiting for a confirmed short and getting a low risk entry. It's not low risk because it's a high probability trade. It's low risk because it's the smallest your stop could be. It's the smallest amount of dollar at risk. So if you are waiting for confirmation, you will pay for it. Maybe hard to see in the stream, but this is where we're at. The trend in solar is pretty clear. So no real change there. It's just doing what it's been doing. So we've defined the structure. We know what we need to see today, and we know what we're very likely going to get today. Watch the news. Keep your eye on the clock. And expect that today is going to be sideways in the indexes. If you're trading futures, it probably wouldn't hurt to go look at gold or crude. You may find a better opportunity there. The Dow really has been doing great compared to the others, if you look at them on a day-to-day basis. So, maybe get out of your comfort zone, look at one of the other indexes. There's futures on Bitcoin, and there's these really, really small Bitcoin futures called nanos, where you literally are risking a nickel. I mean, that's about as small as it gets, right? So certainly something else to play if we do go sideways in the ES and the NASDAQ. And if you're trading stocks, then, with earnings on the table for the, what they call it the other day, the Mag 4, since we've already done some of the Mag 7, playing in those may not be the best choice, but there's certainly crypto space names to play, airlines. Sure, there's a couple other directions we can go just to, find something that's moving that can likely break this big range that we're in now. And a lot of stocks have this really big bar. It's not just the futures that have it, right? So we're going to be inside day on a lot of stuff. Get out, find stuff that is getting outside of yesterday. That'd be a good opportunity to play. That's what I got for you guys. Be careful, be safe. I'll see y'all tomorrow.